All right, it's time to get back into it here. Doing the stock thing again. It's been a good time. Silver ran like crazy. Something I was waiting for. Playboy also big run there. That felt good. Made some money. All in all, things are looking pretty good. And so I was talking, and AA is of interest. And so I'm just gonna walk through some analysis here, and then go through some Playboy analysis as well. Just documenting my thoughts, getting back into this. I think I'll just do this like on a regular interval, small little live streams. It's just vlogging. It's just vlogging. I like having the videos to look back on. It was interesting to see years ago when I was posting about Playboy. I was waiting for Lovers to be sold to really mark the turnaround for the company and the equity overall. Took some time to get there, and there was one more leg down than I expected, but I was aware that this could be the case. Of course, at that point, I sold out, bought back in later. And it's good to have those videos to reflect on and see. And I'm pretty proud of my Playboy trade. I really am. I gotta keep it going. Gotta keep it going. Just gonna keep documenting here. So let's start with AA. Alcoa Corp. I don't know this company at all. Just looking at the chart. Okay, well, let's start with all the gobbledygook. Yeah, tons of lines, right? We've got an uptrend here in an intraday time frame. Looking at 1 minute, this is just 2 days of data. What I think I see is pretty straightforward. Clear uptrend through here that does break, which means we have a motive wave. 1, 2, 3, 4, 5. I've got those labeled in the, what is it, the minute degree. And then I started my sub-minuet and my minuet waves out here towards the more recent price action from Friday. Really what I'm trying to do at this point is just establish what wave degrees are going to be where. I did a lot of analysis on the daily chart as well. I'll go into that a bit. This is a lot to look at. It doesn't make a lot of sense if you're not super familiar with Elliott wave theory. The concept is that price is a manifestation of behavior, buying and selling, and that obviously is connected to psychology, human behavior. And trends occur in price, and if trends occur in price, there's going to be certain mathematical rules that are going to be followed, and so you can kind of couple those things together and kind of put together where a market is by looking at its price. This is easier to do over longer periods of time. The reliability of a prediction is lower on smaller time frames like this. Doesn't mean it's not useful, though. We can get into this a lot. 5 waves up, 3 waves down, 5 waves down, 3 waves up. Doesn't matter. Motive means progress. There's 5 waves. Correction means not progress. But neither necessarily. I guess it is technically regression. And there's 3 waves of that. So we see an uptrend 1, 2, 3, 4, 5 waves. And currently what we've seen on Friday is price start to grind sideways. This is very common in wave B of a correction. This, I think, is going to be like at the wave degree higher, A, and let me think. At the minute degree, I think it's a capital A. And then we're filling out wave B. And wave B has 3 waves in it, so be ready for that. There's going to be a lot of those weird things. Essentially, what I'm thinking what we're going to see here is an up, and then we get this triangle sort of a deal, and then we get this push up. This is basic correction A, B, and C, right? I'm just going to plop it down, and it's going to be slappy. A, B, and C. And you probably can't even see that unless you're on your computer. I recognize that this is not like a phone-friendly stream. There you go. Nice and fat. A. And B. And C. Now you might see it, right? This being wave A, and then all this gobbledygook over here being wave B. We won't know whether or not we're really going to push up into wave C until we pass the peak of wave A at 61.23. Are we going to get there? Probably. There's a smaller iteration of that same pattern occurring right in here. And if I zoom in enough, it's like the same chart. Here we see 3 waves heading up instead of 5. But principle is the same. Here we have A, B, and we're going to look for C. 1, 2, 3, and then this will probably all turn into a B wave. And I've got it labeled complete as A here and B starting. It's optimistic, supposing that this downtrend ends soon, right? If price gets above that 60.54 level, then we'll see price test this 61.23. And so this is what we do, is we say if price gets above 60.51 and we follow some rules, those rules being that we don't retrace below that level after we push through. Okay, i.e., let's say we come up. We don't want to necessarily enter a position right here, right when the price is starting to break out, because it's likely to come back down again. As long as we stay above that level, we're going to be good. And so we almost expect that. And so the idea is that you don't necessarily always want to trade. It's right when the breakout occurs, but wait for that pull back. And right in here, if you start to see volume, you start to see support, you're watching the order flow, you hop in, and then you know that you're going to cross the $61 price, which in the options chain is called a strike. And if you want to make some money day trading, that's what you do. When that option contract is out of the money, the price of the stock is below the strike on the contract, it's not worth as much. You buy it when it's cheap. If price pushes above, it's worth more. You sell. You buy low, you sell high. You do that based on whether or not you're on the strike of that options contract. That's kind of risky stuff, really. I mean, if you wanted to be smart, you'd be like buying deep in the money. Deep in the money. So that your options contract is really just like a cheap way of buying and selling 100 shares. That's a whole other thing. If you're a day trader and you're just in and you're out, that's what I do. I might hold a position for a couple of days depending on the particular equity. There are Greek letters that represent different, coefficients, different aspects of options. Beta, delta, theta, vega. Very complex stuff. If theta's low enough, I'll hold a contract for a little while, which is why I like trading Ford, actually. Ford's options chain's pretty liquid. It's pretty good. Plenty of strikes. Stock's not too expensive. Theta's very low. Vega's very low too, but it's a safe trade. I backed out of some trades on Ford recently. I'm glad I did because it's really choppy. I do not like trading through chop like this. Do not like it. This is not fun to trade through, especially Wave B. Never want to trade Wave B. Wave B is the worst. Hate Wave B. Definitely wait for Wave B to end, i.e., wait to be out and above 60.54 before trading that $61 strike. That would be my strategy. That's what I would do. And then up to 61.23. Zooming out a little bit, you can see we're talking about little waves, little things like that, just tiny. Alternatively, if we don't get above there and we get some bearish move to the downside, we're going to wait until we get below 59.20. And so there's this big, tall range through here between 59.20 and 60.54 where I wouldn't want to be trading personally because the price is so flexible in a corrective trend. It can literally do anything. It's so unpredictable. Very unpleasant. It's not a good experience. So I'm going to delete this little gobbledygook over here. And I do want to note the larger picture. These are all waves of small degrees. They're small. They're bigger waves. Small waves make big waves. So what's the bigger wave really doing, you know? And what are these other lines? Like, what's this big white line? This big white line is showing the price target for the breakout above the 61.23. And this is where I want to go with this. That's a pretty big move, pretty big jump, up to 63.13 or even 65.56. 63.13 being the target. And so if we did get above 60.54 and you were brave and you traded into that and held, there's a tremendous amount of money to be made there across multiple strikes. If you're brave, if you're ballsy, if you're going deep in the money with your options contracts, that makes more sense. really you're just dealing with delta then and not having to worry about theta as much or vega. And so that is personally what I would do if I were to try to get in early. I don't try to get in early. I always do it by myself. I don't need any help getting in early. Nonetheless, I digress. Get above 61.23 and run to 63.13. Awesome. Now, depending on how accurate this wave count is, I can say, God, it's got to be, there's a 60 or 70% chance we get this high. 60 to 70% is actually a lot. It's way better than random, isn't it? Way better than random. And if you can trade enough at 60 to 70% odds, you're going to win as long as you're managing your losses. You can't let the 30% you miss wipe out all the gains you make on the 60% you make. And that's difficult. So hard to sell. So hard to know when to sell. Selling is so hard. Buying is so easy. This is what I would do, personally. I would wait for this thing to break out above 61.23 or come back down. It's going to look weird. If you know what you're looking for and you see it, like, do it. But I'm bullish to 63.13 here. That's my bias, is up. On a larger time frame, it changes, though. I don't think I have anything here on... let's go really big picture. I'm going to change my drawing sets here. So this is a weekly chart. Doesn't make sense on the weekly time frame. Give me days. So here's the deal. There was a big downtrend coming in through here that broke. And we get this nice double bottom. Low here, low here, call it double, call it a bottom. It's a little lopsided at the low end on this side, which I don't particularly like. Regardless, what I think I see is a price mirror right here where the incoming trend on the left looks like the outgoing trend on the right, or the price action, I should say. Doesn't matter so much. Neither of these waves look super motive to me. They look very corrective until you get to this big rally through here. This is nuts. This is a crazy run. We're talking from 22 to 66, 300% is a lot. And that little price action I was talking about, right? I'm going to highlight it right there. That was the last chart I showed you, was that. And suddenly 63.13 doesn't look very high anymore. We have a high near 64.97, and that's not the actual high there. Now the close on the daily time frame was 65.67. So 65.67 is pretty close. This is a price target that we generated from some other pattern back here, actually, I think. And this is from the double bottom analysis, actually. And that trade would have confirmed when you got above 46.62. That's a chart pattern thing. Thomas Bulkalski's website, thepatternsight.com, he goes into those. And so this was just a big W, and that's what you would have done. You would have seen this, and you'd have said, okay, once we get above 46.62, I'm in it. And you would have traded just this portion of that trade based on that, actually, just this range, which is fine, okay? That's like 26% still. That's a great trade. If you're trading tens of thousands of dollars, 26%'s great. If you're trading $1,000, 26% is still good. It's percentages, right? But nonetheless, I digress. Why am I thinking 63.13 short term and then am I bearish thereafter? Because what I'm looking at here, pattern-wise, is pretty normal. It's a nice motive trend with 5 waves going up. And then what? 3 waves going down. Wave 1 was pretty normal looking, honestly. Had a really complex correction through here. It took me a long time to figure this out. And I even had to draw like little lines. I should really just get used to making everything here. Like, I'm just going to start doing this. It's going to look so dumb on my charts, but it's like a WXY for wave 2. Ugh. That is a headache. It's such a headache. WXY is another way of saying multiple sets of A, B, and C. And you just start labeling them different letters because that's what makes sense. But really all we're doing is we're talking about multipliers. Sets of 3. Okay, so here we go. Waves 1, wave 2 is a sideways. If you can't see like what I'm trying to say by wave, I'm talking about trends. Price runs up and then it moves sideways through here. And this sideways action, that's what is not establishing progress. We aren't setting higher highs. We're just kind of bouncing around. Sometimes we do set higher highs in a correction. It does happen like right here, but ultimately price completely retraced at that little run up. That's not motive, that's corrective. That's a B wave, that B, hate wave B. Hate wave B. All right. Wave 3 pushes up. Simply can't be the shortest wave in Elliott rule. So, 39.50, it did get above 39.50, so it was technically longer than wave 1. It qualifies. 1, 2, and 3. It's hard to see this and not call this a triangle. You can't have a triangle in wave 2, though. And that's why I had to break it down into WXY. It also doesn't it was really, really tempting to see a triangle through here. Let me show you what a triangle through there would want to look like. Maybe just, you can kind of see like between the uptrend and this, it's like 1, 2, 3, not really 4, almost like 4, then overthrow the top of that ascending triangle for wave B. But it didn't really work. WXY it is. Wave 2. Wave 3, nice clean motive trend. See how that works? Wave 3 just runs. Just boom, that's progress. That's motive. Correction into wave 4. And then wave 5 is just silly. That chart goes straight up. Straight up. We call that a blow off top. That's insane. And so I'm thinking, yeah, we see price come up a little bit and then come down to like 48.12 in correction for a sharp correction too. A, B, and C, it's just going to wreck. It's going to take a lot of this rally down. That's how stocks work, right? After all, you see it here. Nice healthy push from 25 to 44 and then down to 28 again. Like, ouch, right? 1, 2, 3. Oh my goodness. And then you have A, B, and C. And I bet you that this is actually like X. This is Y. This doesn't have the right look to be a motive trend. This is another really complex correction through here. You have a nice strong motive trend down through here, right? Clear downtrend, whatever it is, through there. And then you've got this choppy sideways, and then you get another move down, but that's neither here nor there. This is a good motive trend, but I do think it's over. Hitting that target at 64.97 off the big W. Now I'm looking for A, B, and C. So that's a long-winded way of saying Alcoa looking a little bullish here for a couple days, maybe a week. After that, I would expect to start to see more correction to the downside. If we get above 64.97, that could still be part of the correction. Having looked at this stock a little bit and seeing that wave B can set new highs while it corrects, we might push above there. And if it does, I'm going to be calling it a bull trap because that sucks. You can almost see the RSI. Let me scooch this over a little bit. The RSI down here, if it were to go up there, I bet you would form a bearish divergence. That would mean that we get a, I don't think I want this to be my default anymore. This is annoying. We're going to get a lower high in the RSI while the price hits a higher high. Yeah, that would make sense. If we don't just go straight down, maybe we do have one more push here. And that's why we're going to wait to sell our bullish positions until we see some retracement. At any rate, yeah, next week probably up. Longer term, I am looking for correction. If it just corrects sideways, it can do that too. The price is going to want to re-find this price trend, though. It's going to want to come back, touch this, find support and resistance. If we zoom out, let's see. Can I get some more time frame? Should be 5 years. Pretty choppy. Looking back here for prior peaks and valleys for support and resistance, there's not a whole lot. There is some chop through the 60. Yeah, I think it's going to have to work a little bit to get back up. But we'll be following this one. Now, what I really want to talk about is Playboy. Let's see. Playboy. This is, okay, big chart. 5-year. This is a daily chart. So I don't want to use candles when I do my Elliott wave analysis. That's pretty close. This was a huge downtrend from failed SPAC to over bloated. Like, the company was doing so bad. It makes sense to see that the price, crashed. It really does. Finally bottoming at this 40, 50 cent range, and this is where they sold lovers. It's exactly what I was looking for, and now we're starting this big uptrend. And price is accelerating in an uptrend. We have a new uptrend. And we'll make it green. Isn't that nice? Let's see. Oof. Log scale is brutal. Show me just this much. There we go. And so the question becomes, where, if we have bottomed, are we starting to see motive trends to the upside? And the answer is there is a motive trend right through here, which is really nice. Looks really good. And of course, it ends and corrects. That's normal. And this is what's really getting me, is there's like this perfect little 1, 2, 3 motion in here that looks like a complete correction. And now I'm looking for bullish waves up. Now, I'm going to run you through this real quick. This is one of the possibilities, is that this was the length of wave 1, the incoming trend. And we went A, B, and C. And then for wave 3, we're really looking for an extension beyond 100%. 161.8% puts us at 390, so $4. $4 is really where I want to see this go. And the question is, are we on our way there or not? We've seen another motive trend through here. This looks pretty motive. This could be interpreted a couple different ways. That's what's so tricky about it. It's like, is that really motive? I think it is. And then we have this big, perfect measured move down. This is like correction example textbook right here. 1, 2, 3. Really, I should say A, B, and C. And we know that it's over because we've set a new high. So this incoming wave was an impulse, motive trend, setting progress. This was the corrective trend. You'll notice it set a higher low from the previous low. Then we got a higher high. So we're in an uptrend. The question is, if it is going to go higher, this has to be now, this run has to be of a smaller wave degree, which means we're going to be extending into a wave 3. And it's so hard to predict when that's going to happen. It's a gamble, especially when it looks like this. This is such a weird looking shape. And so much of me wants to be like, oh yeah, there's a triangle right there, because that's wave C, right? And so, like, this is how I want to see it. And it kind of makes sense. It kind of doesn't make sense. We won't know until we get a new high or a new low. So the uncertainty level right now is wild. Right now, I just want to accumulate shares. I'm just trying to accumulate. But this looks like A, B, and C, plain and simple. The only problem is that this run was all due. Most of this happened in pre-market. Like, most of this was before the stock market opened, and it was due to a news release, really good news. And you can see this big volume spike right here, and implied volatility down here. Volatility just goes nuts. It's so hard. If this is A, B, and C, it's not motive. Definitively not motive. Definitively corrective. But it can't be corrective, right? Because we're not looking for a corrective wave up. Is this wave A, B, and C? This could be another A, B, and C, right? If it is another A, B, and C, it gets really, really complicated, because then we're saying that it's so complicated. And now these don't make sense, right? But if this is an ABC wave, right? Let's get rid of this. If this little thing here is an A, B, and C, and it's like A, B, C, if this is motive and this is A, B, C, A, B, C, that wouldn't, could it be a big triangle? Could it just be a big ass triangle? That's the other notion I'm struggling with, but it doesn't really work. I mean, it can. 1, 2, 3, 4, 5 retracements. 1. It's very difficult. It's very difficult. Anyway, let's talk about this other analysis I have where we just say, okay, we just accept that it's ugly. We have wave 1, 2, 3, 4, 5. This follows the motive wave trend rules because wave 3 is not the shortest. Wave 4 doesn't retrace wave 1. And if we do this, we get a running flat here, or what do you call it? Expanded flat, where wave B sets a new high. And that makes this analysis a little easier through here. Like this looked like a motive trend. Let me zoom in on this and we'll talk about it for a moment too. Where I thought maybe it was 1, 2, 3, 4, 5. Just this didn't look very 5-y, didn't look very like motive wave-ish. Didn't look right at all. And so it's like, okay, well, what is it? Could it actually be A, expanded flat, C, X, A, and then we get like a running flat B, and then A, B, and C for C? This makes a lot of sense. This makes the most sense to me. A, for the first reason, it's complicated. Thing 2, I hate it. Probably right because I hate it. But like really what I want to see is like, yeah, this is the end of the correction. And now we're going to start seeing motive trend push up. We have a similar pattern as we saw in Alcoa here in Playboy, where we have a wave A, which is motive, and it has the right wave count. Looks good. Looks weird, right? And then wave B and wave C heading higher. I would love to label it 1, 2, 3. Make it wave 1, make it wave 2, and then this thing turns into wave C. 233. Would love to see 233, especially after that big downtrend. But the fact of the matter is it could just be a much, much, much more complex correction, and we could be giving back all of these gains. So we'll just take from the top of B there, and we'll just take it from where it is now. And it's like, ooh, $1.25. Yikes! If price breaks below, 189, nope, it's cooked. It's like big correction down. I wouldn't want to see that. That would be really sharp, really hard, really fast. It's such a weird place to be right now for a stock, to be breaking out above that massive downtrend. Like that downtrend is just, it's huge. It's a huge downtrend. We had a high, we fell down below it, we found price support, we set a new high, we came back down, price touched that downtrend, is moving up. If we get above, seriously, if price moves above 271, like $4, no problem. Absolutely no problem. 348. This is a huge, tall range. 149. So what? Between 149 and 271, we don't really know what's going on. I bet you that this intersection right here proves to be interesting. I bet you something happens here. What is that, early April? Earnings are going to be soon. There's going to be, let's see if I can turn on corporate actions, see if it's up there. Equities, general, overlap, show trades, show high-low bubbles, show alerts, show corporate actions. Where did you go? Are you on time axis? Chart navigator, expirations, favorites, appearance, equities, show corporate actions, apply. Let's see what it is. 312. So I think that end of February, there's something relative to the deal that they just announced. whether it closes or not. And then earnings will be right here. And it's like, you look at this chart. This chart is completely wacko. Big, massive double bottom. It's broken out. It's confirmed. It's hit that target. It's retraced. It looks like a big W with a big handle. It's like the epitome. It's textbook bottom. And it just matches the fundamental analysis where the company's changed. And so we wait. I just want to buy enough shares before it breaks out. I'm getting serious FOMO over here. Man, but what if it is just like a big triangle? It's just a big ass triangle right here, right? 1, 2, 3, 4. Doesn't matter. I think it's all bullish in the end. It's just a matter of time. And the deal they signed, that's going to affect how earnings are reported big time. I think it's going to be nuts. It's going to be nuts. I'm just going to try to get as many shares as I can. Like, how many paychecks do I have before March 12th? Figure it out. Anyway, this is getting long-winded because this is how I get when I stream. Anyway,